Could Bitcoin Treasury companies cause the next bear market? It might not be as far-fetched as it sounds. On a recent episode of Chain Reaction, we each gave a hot take, and mine was that if we were to see another frosty crypto winter as bad as the last one due to some catastrophic black swan event, it's going to be Bitcoin Treasury companies that cause it. Don't get me wrong, I'm a Bitcoiner and I believe that Bitcoin is the exact right asset to hold. But treasury companies complicate things. Recently, the VC firm Breed released a report that perfectly demonstrates the exact scenario that I worry about. It outlines the 7 phases of a Bitcoin treasury company's collapse. And as you can see, it starts with BTC's price dropping, which causes a lower MNAV. Now, a lot hinges on this MNAV, so let's discuss it. Multiple on net asset value, MNAV, is the ratio of the company's market cap to the value of its Bitcoin holdings. So for example, Strategy's market cap is about $107 billion at the time of recording, and they hold around $64 billion in Bitcoin. So broadly speaking, that means that investors value Strategy about 1.7 times its Bitcoin stash. That's MNAV. Bitcoin treasury companies want as high an MNAV as possible, because not only does it allow them to raise more money to buy more Bitcoin, but it also shows a degree of investor belief in the company. But if a Bitcoin treasury company's MNAV were to drop too low, because perhaps Bitcoin's price fell heavily for whatever reason, as it sometimes does, this could trigger a death spiral. For example, Bitcoin's price falls, MNAV vanishes, margin calls are triggered, the company is therefore forced to liquidate some of its Bitcoin, Bitcoin floods the market and causes the price to drop further, and down we go. Now, I do think some Bitcoin treasury companies would survive this, but if I had to put my money on the cause of the next brutal crypto winter, if there is indeed to even be one, I would put it on this very scenario. But what do you think?